Hello, 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 everyone. How is everyone doing today? Let me just get this adjusted a little better. That's a little too much. There we go. Had to change things for the Ninja Trader webinar yesterday. So, again, how's everyone doing? Good morning, Ro. Good morning, McRangers. Good morning, Patrick. Good morning, Sterling. There is not much in the news. There's not much going on today, period. Good morning, Royal Palms. Good morning, Richard. Well, there, you have two trustworthy people trying to, like, Hamas is trustworthy either. You don't have Biden, Biden and Hamas trying to go. That's a joke. Oh, boy. Let's see. Remind me in a bit, Royal. Okay. There's really a quiet day today. We had Redbook just come out, 4.9. Redbook's still hanging in there. He's still hanging in there. You can see, over the last, it's way down from beginning of July, but it's still hanging in there. So, how does this look? See, we're still from earlier when it was down below 3. So I'm going to keep and watch on the 4 level on that pretty much, but that's it. Nothing to report there. We got Bostic and Bar speaking. We got a bill auction. We got nothing. We got nothing. Maybe it's turnaround Tuesday, could be maybe pause Tuesday. There's nothing to talk about. Lily's up, Nvidia's down, Tesla's up a bit, Google's up. Mixed market this morning with very little news out after a very strong rally. Basic materials, healthcare, comm services leading, but not by much. Basic materials is only at 26 basis points. Technology lagging at minus 16 basis points. Fed watch, nothing's changed here. Still has the market has priced in, let's see, 25, 25, 50. So 100 basis points of cuts through the end of the year. Fear and greed finally nearly back to neutral mode. And Schiller PE back over 36. Markets are not cheap at all. Lowe's beat on EPS, but more importantly, missed on revenue. So that is, again, same thing we roughly saw with Home Depot. People are starting to cut back. After the close, we have Toll Brothers. Tomorrow, we have Target and Macy's and TJ Maxx before the open. This is a day, just take a breather. Good morning, Anissa. Not believing that statement there. Oh boy. Your fiance is a little jealous I spent so much time with you. It's not that much time. It's not that much time. She gets the rest of the day. So again, very strong rally. Even yesterday, another day up. If it does pop up for some reason the open, we have a very strong resistance level on the Nasdaq. We'll just start there at 20,000. It's a significant level right around 20K to 20,075. What I'm watching today on a pullback is 19,690 to 19,700. On the bigger pullback, which I'm not expecting, but I have to map out, for all contingencies, 19,375 area, which is roughly the rising rotation zone. And keep in mind, it closed yesterday above the 62.5, so you still have the 20,075 is the magnet price. If it keeps marching beyond there, you're closer to 20,529. How far off did Lowe's miss? Well, I don't have that memorized. Lowe's missed. They missed by 1.42%, which is a substantial miss. 340.476 million, which is a substantial. I always looked at percentages on that. because that gives you the percentage miss. That so you're not just, oh my gosh, they missed by 340 million. Well, 340 million on a Lowe's is a lot different than 340 million on the Waffle House. You know what I mean? So there you go. S&P key area I'm thinking watching on here, if we do pull back, even is 55.94 to 5600. That's my pullback level with the rising 4-hour rotation zone. The bigger pullback levels, so something shocking happen, is about 5,535 to 5,550, somewhere in there. So those are the two key levels. We almost, there's this black line, by the way, up here is a significant level overhead. There's a pretty significant level right in front of the 87.5. We already hit that significant level this morning. So remember, the next magnet price is officially 56.46, 56.50 area. That does not mean it has to stop there. But that was the magnet price after a close above the 62.5. Also remember, if it takes out new highs, the next key area is 57.96, so roughly 5,800, based off the reverse harmonics. Hey, Charles. Morning, Heinrich. You're doing your part to help Home Depot and Lowe's. Lots of honeydews around my house. Well, got to spend a little more there, Patrick. Next quarter, you got to really help it kick it in gear. We'll need more honeydews from Patrick. Oh, thank you, Anissa. Great webinar on Ninja yesterday. Glad you enjoyed it. Hope somebody else caught it besides Anissa. I always like feedback from there. Thank you very much, Anissa. Then thank you for tuning in. What else do we have? So that's the key things. I mean, we're at a Jackson Hole. We don't have a lot of stuff besides a couple Fed speak coming out. We have the FOMC meeting minutes tomorrow afternoon also, right before Jackson Hole kicks off in the evening. So after this kind of run with overbought conditions, I'm expecting a choppier pausing area. If it did get another rally on above this 56.50 area, the next really significant area is right around 56.80. That would be my next target should something ignite a fire on the market even through tomorrow morning or tomorrow midday. Dow, next magnet price is 41,281 area, which is pretty significant. Dow, again, I'm watching for a pullback. I'm keeping an eye on the rotation zone, and the little area I'm watching on the pullback is about 40,775. Russell, still in the topping area, still needs to close above 21.97 to shift the probability is not there yet, but the key support on the Russell is about 21.55. Other than that, 21.97 is the magnet price still. VIX it was in the 14 handles earlier, slightly up, but this is nothing from my perspective to worry about. I'll start watching for the bigger pullbacks if it starts trading above 16. DAX, little pause here after hitting that 75 harmonic. Key support now is back at 18.3. Interesting enough, the yields are dropping out of the triangle. But you know how I feel about triangles, because there is a very key area of about 3.75 to 3.8 for support. So that would be a target area to the downside when I'm not doing anything aggressive on this, but that would be the key area I'd watch to hold if this triangle. See, here's one of the challenges. Let's say it comes down here. Now, instead of a equilibrium triangle, you have a flat bottom and a declining top. So a descending triangle, so it just shifts the nature of the triangle. That's why I hate trading triangles. I like just watching for, you have the rotation zone, there's been some selling pressure there. But even if there was an intraday short or some kind of other short signal, I'd have to have a first target down here because we could get a pretty substantial bounce. 10-2s still pulled back to nearly minus 15. So I'm going to watch if that resumes its uptrend with the Jackson Hole stuff going on. Dollar index, not yet to the key price, but getting there faster. Getting there faster, 101. 101 is the key price. Does it have to stop there? No, but that's my area that I'm looking for to complete the 87.5 rule and the double top rule. Crude, I got a question about this. Well, you know, because here yesterday it traded below the 62.5 and now already hit the 87 and hit the 75. Now it bounced off the 87.5. Well, the only way this could have been taken advantage of is if there was intraday short signal, which depending on your strategies and everything else, it broke down from a very little key. Remember, there was a potential double bottom here. It sliced through there with pretty strong momentum. All right, you see the selling pressure down even if you come down to these 15-minute charts. See momentum bars. So when something happens like that, if you're trading it intraday and then it follows through with the close below the 62.5, then I can always try to extend my trade from my perspective to that next key 87.5 level where we've already had the bounce on. There's prior major support here. So in there, that would become a new potential target for taking the next action on. But if you're waiting for a close, there'd be no way I could get reward to risk on this. Because look, it closed here at the 75 and the next move down it was way too tight. So if I was waiting only for a close to take action, it was a trade that just could not be taken advantage of. Gold continuing to just march higher. Gold continuing to march higher. 25.81 is next, coming up back to the prior breakout zone, 25.20. Silver looking like it might, technically the double has not been invalidated, but over these last couple days, looking like it's finally getting a fire in its ass, but I need it to get above 30.41. 30.41. And I'll show you why something, let me show you this. Okay, here's Palo Alto Networks, which reported. I just want to point this out, why technically, now these can be tricky to trade at times, but I have the invalidation rules. And why do I have invalidation rules? Because there still might be shorter term trades. As long as the thing is not invalidated, it might be still possible to get in on shorter term trades in the direction of stuff. For example, you see here we had the pretty substantial double bottom against the 50-week. It was triggered all the way back in June. Now, the stop raising point was not triggered ever. So still remember the stop is on a close below the 62.5 from the original leg or a trade below 75. So you had this gap down here on, the Wipeout Monday. Did not close below the 62.5 from the original harmonics that set up the double. And why are we not moving this yet? Because it did not hit the stop reduction. Those are the rules. So this was never wiped out. Now what's interesting is you then had a follow through %B buy the next day on a close above here. And now look, we just had earnings come out. The target is 352 area. Now it would be, with this gap open, going to be raising the levels. So yeah, was this rough to sit through? Yes. But it never invalidated the pattern. So back to silver, until this pattern's invalidated, I can't, now, this one, the stop's been lowered. Why has the stop been lowered? Or the invalidation point? Because you might have already taken some more off, especially once it broke up to back up to the upside. But this did hit the first stop lowering point. So now if silver closes above 340.41, it's invalid. The rest of the pattern is invalid. Just wanted to point that out. So even if you aren't in a trade anymore, I pay attention because you can have your stops different than the invalidation point. However, until a pattern's invalidated, the probabilities still stick with the original probabilities of the pattern. I hope that makes sense. Yen, still nothing to look at yet. I'm really interested to see if this comes down and hits double bottom and then how it reacts, because it's still in the rotation zone, rotating down. Euro, finally with yesterday, remember the magnet price is 110.70, through it yesterday. So if the euro, so that would definitely from the euro longs at least be a stop reduction. Now I'm shifting to the, if it breaks above the highs from last December, from the end of last year, 112, and then 112.06, so I just use 112. I actually use 111.95 as the next target area. And then look at how the harmonic lines up with the prior highs from July of 23. So those would be the next two key areas that would either be stop reductions or profit taking. But now it's completely 87.5 and it's coming in on a very significant area right here that is already hit. Okay, and why is that significant right there? It's right by the prior tops from April of 23. You see how it spiked above here? And then this is a key reversal close back from the end of the last year. So that in the short term was a key target area above this 87.5. I'm watching, especially if the dollar hits that 101, the dollar index hits that final target area, I'm watching for a little breather, at least in the euro. All right. Hey, Charles. I think, oh, you get highs again. Morning, Heinrich. What? You saw it. Thank you, Brian. So, Mike, help me. My little sister, who's 43, has decided to be a trader. Oh, no. And has now found options. Everything I try to tell her goes one ear and out the other. Well, sometimes you got to let people learn the hard way. What is your trader answer? Buy calls or puts and sell them shortly after for a profit. What's your trade strategy? I'm going to buy something and sell it quickly for a profit. And what if it doesn't go in your direction? Thank you for posting that, Sterling. Because I don't care if you follow I hope you do get something from the like levels I show and everything else, or at least how I structure some things. But why do I stress targets, stop levels? I don't care if they're just similar to mine or not. The same thing. If you can't come up with targets and stops, you have no reason to be in the trade. No reason. Okay? Because you can't define the trade. And I'll give you an example. We went back to crude. I'm doing a little teaching today because there's not a lot going on. Let's say your original target for some reason was the 70, we're going to watch that 75, and then we close below, we also close below 62, and you're in an intraday trade. And you have the luxury with margin and everything else to potentially carry it overnight. Well, this, because the probability shifted, now my original target's here, I'm still going to take action, which means I'm still going to definitely I'm not going to just ignore it and say, oh, well, I'm extending my target. No, my stops are going to come down because if my originally plan was for that 75 level, I still have to take an action. And action could be I'm adding a little more to the downside, but I'm also lowering my stop. It's not just, oh, I'm just going to ignore this. If I'm extending a target for something, or it could mean, hey, I'm taking, let's say I'm in, like I still have 4 minis on. Okay. Well, maybe I was going to take the whole trade off. Maybe I was here. I say, oh, I'm only taking 2 of the 4 off, and I'm extending my target now because we closed well below that 62.5. I'm extending it on the last 2 to that 87.5, or at least taking 1 off at that 87.5 if I think it's still going lower, or if I have other things that say it should continue to at least retest those levels. But that doesn't, I just don't throw my targets out. I'm still taking some kind of action, even if there's a reason for me to extend a trade. Remember, I've talked about that where we have a double, and then the final target on the double is just beyond that 62.5. So we close above that 62.5. Well, then I can always extend the double trade. But that doesn't mean I'm not still taking action like raising the stop, because if the double was the top, yeah, I'm going to give a little back because I extended the target for a valid reason, but I'm not just going to ignore it and be, oh, well, I'm throwing that target out. I'm not going to do anything. I'm just going to go into greed mode. So if you don't take anything else from me, and a lot of people have to learn the hard way, they have to blow up or at least suffer a lot of pain before they realize that this isn't just buying calls and puts and, oh, I'm going to buy something and sell it higher, or sell something and buy it back lower, and I'm going to do it quickly. And this is the thing. When you catch a trend, that's why the longer term trades, even swing trading, is easier, because when you try to do something short term, yeah, you're scalping, but you're trying to scalp more often. And then when something goes against you, you're like, oh, it'll come back. And then you turn a small loser into a big loser. And then you have to really grind it because you're taking profits so quickly instead of letting things run. The best trades are the ones that keep running. So many people miss that because they're like, oh, I'm just going to take a quick profit. Well, what about the ones that don't go to quick profit? Then what do you do? And I'm not picking on your sister or anybody else. Hey, Anissa, let us know when you're on, Ninja. Let us know. You should put it in here. I can't tune into Ninja all the time because I got other things going on, but I'll definitely tune in for some key people. You eventually told her that she was going to lose all her money. I can't get her to understand that you have to have targets and get in stop losses and targets take profits. Yes. And I didn't even see that comment yet. It's sometimes she's going to have to lose her money. And I tell her to not put it more in an account than she's willing to lose, because she'll probably end up blowing up that account. So sometimes you just have to let people do it. It's unfortunate, but I'm sure there's been instances in everyone's lives that they didn't listen to sound advice because they didn't think it was sound advice. They thought they knew better until they realized that eventually maybe they should have listened to the advice, but it took going through some pain. Lots of people go through that. A lot of time. All right, are we talking equities and financial futures like the S&P, NASDAQ? You watch for, you don't try to grab the top, Coco. You try. That's why I love to trail out, especially in things that tend to rise over time, like in equities. Unless I get, all right, if I get like a massive weekly double top or a daily double top in a shorter term and it triggers, That can be something very key. Other than that, I like to trail out. Keep raising my stops. I'm not trying to call a top. I'm trying to maximize, and you're never going to top tick the market. If you did, you got lucky, and you can't rely on that as a strategy. So trail. Learn to trail, especially in stuff that goes up. For example, gold's long-term bullish. It's in trailing mode. If we get a massive topping pattern, that'll be something that makes me sit up or take notice. Or if we start closing below key reversal areas like these 62.5 areas. Did that mean I called the top? No. But there is not even a topping pattern in sight yet in the long term, so it's trailing. If we get a topping pattern in sight, A, I'll talk about it if I see it. B, if that then triggers, great. For example, remember we had a bigger potential double top over here? Never triggered. So long term, still intact. That was back here. Potential double top against the rotation zone. We talked about this. Never confirmed or triggered. Still just grinding higher. Not looking to call the top, and gold has a bias, a very strong bias upwards for the time being. For example, just because in the S&P we have a potential double top does not mean anything, because this could keep grinding higher. I'll keep an eye for long-term stuff if it does trigger, because that could be a substantial pullback and even more potentially. Other than that, and for short-term, it's just in trailing mode. And it's in more aggressive trailing mode once we get above the 87.5. Because we've completed the 87.5 rule. But does that mean everything's done? No. I'd rather get stopped out of a final position on raising a stop than getting out and going, now I'm looking for a re-entry. I'm looking for a re-entry, and it just keeps going. So I don't mind on things that have an upward bias getting taken out by trailing stops. I actually prefer it. It takes the pressure off. Just keep raising the stop at the key levels. BMY. Bristol Myers Squibb. Here's another. So let's see here, because here's probably a key example. So let's say you got in something, you had a signal down here. Was this even? Let's say you had some kind of signal. This actually looks like it could have been a %B buy. Let's see. So that %B, yeah, that was negative right here on a weekly. Another tip, if you know the %B rules, okay, weekly %B buys on stocks against defined support base are great for what I found a decent reward to risk. Why? See how this, because I can keep a stop below the most recent weekly lows, even if it's against the rotation zone. You see how it took a while? It took a few weeks to establish a base. You can see it on this daily. Okay. Then you got the weekly, just something for you to investigate and test out for yourself. You got the weekly %B buy and the close, follow through close above the prior week's high. And then definitely for this thing, when I do stuff like that, you see the prior breakdown zone here is, besides other harmonic things, are definitely a first target. I look for first target areas. And you see here, let me just take off this real quick. You see here, now, you had the breakdown zone in the 62.5. So that's going to be my first target area. It closed above the 62.5, has not pulled back far enough to invalidate that it could keep going higher. It's paused against the 50-week. And this is just a pullback to the first cross rotation zone. So what would I be in? I would be in trailing mode. Now, we've hit the 75. Could it still go higher? Now, what would invalidate my final thesis? It would definitely be continued to be in stop raising. But what would shift it before this 87.5? If we had this double top trigger. And it is a valid double top. So if we got a daily close below 46.22, I'm done. Why? Because even if you take the conservative targets, do I want to potentially ride it back down to roughly where I got in? And I have no trade in this. I'm just pointing something out. But look where it could go back to. Look where the percent B technical entry would be. Do I want to ride it all the way back down to the entry price? No, not if it's final trailing. You know, and before even this, you know, pay attention to double tops, because here, was this valid? Yeah, first and second targets were still within the move, and the final target was within, it might have even been within the bodies there. And then that one continued, but it reacted down there before it continued. So do not ignore this. This is not something like if you're long from here, oh my gosh, I'm trailing. Oh wait, I'll just ignore the double top. I'll just ignore it. Oh crap, I'm back below my entry. No, because yeah, does it always work out perfectly? Could you get faked out? Yeah, sometimes that happens. But if I'm trailing for my final position, great. And would this be one I consider trailing for that final position? Yeah, because the probabilities on that weekly still have shifted that this could go higher. So I don't want to be taking this off prematurely, especially if I've already taken some profits. And I would not ignore this 87.5 area. Why? Because also look at this. If I'm just looking at pure price action, look, topping area back in November, topping area in December and January, broke through it, tried to sustain above that area, but forming a double, then collapsing back down. So this area, even if you don't use the exact 87.5, look for other key price action targets. And this holds true. I'm just using this as an example. You're going to do the same kind of analysis if you trade whatever. Copper, crude, Dell. It doesn't matter. You know, it's consistent. So I would not just go, it hits the 87.5. Now, does that mean you exit everything? No, but I'd be more aggressive at raising a stop up here, unless it can get some very strong momentum and start breaking above these highs. So that's where we sit. I hope that helps. Thank you, Coco. All right. Nothing to talk about, really. I mean, I'm erring on the side of a choppier day with these reversals. This is a day from a short-term trading, I would not be looking to overtrade. Very slow news day. I had a Jackson Hole in the FOMC minutes after a substantial run. This would be a day that is more suited to managing any current positions than establishing new ones. And I'd be careful on over trading a day like this. I hope that helps people from a teaching perspective. And I know many of you have heard it before, but some people always need to hear things again. NVIDIA, this would be another one. Now we've taken that to 75, but you still have the probabilities. And going into earnings, would I be, you know what, we remember we have earnings not this Wednesday, next Wednesday, and the magnet price is still 134.50. And above that, you have a key reversal bar. Not just that, look, here's how to spot price action. Look at this key close back on June 18th. Very key close. Why was this a key close? Next, they gap open and the close outside reversal bar. So this was the highest close, okay? On this whole run up, this was the highest close. The charts can tell you a lot. Look at the gap open then price. So we tried to climb up there. This day on the 10th did not close above it, but look where we gapped to. That prior key close and another key reversal bar, an outside key reversal bar. So not only the 87.5, you look around that 87.5, many times you'll find very significant price action. So 134.50 to 135.75 would be definitely an area for many longs. I'd be saying, if I ignore that and don't even raise a stop, I'm a friggin' idiot going into earnings. Okay? I already covered Palo Alto. Prof in grade school used to say, repetition is the soul of education. Again, the soul of learning. I agree. You can never hear things too often. If you go, oh, I already know that, then you're getting your arrogance in the way. You know what? Because I even forget things at times. I make mistakes. I'll go, man, I didn't see. I might have developed a scotoma to something. If at least if I hear it again, it can help me realize I didn't do something. It might have been something I've just set aside because, hey, oh yeah, I know that, whatever. Then I realize I broke a rule, and you know what? I needed to hear it again. So for anybody, hey Sterling, if your sister's willing to watch one video, put her on this one. See if she'll spend 30 minutes. Because somebody won't spend 30 minutes with somebody who's been in the industry since 1992. How long is that now? 30, boy, we're 34 years. If somebody doesn't want to watch something from that, then, or even learn or potentially learns one thing, then they're not serious. Okay. Thank you everyone for tuning in. I hope everyone has a wonderful, wonderful trading day. By the way, there's another key, very key level in NVIDIA going into earnings on any gap down. I'd watch 118. Just throwing that out there. I hope everyone has a wonderful trading day. Recommendation is on days like this, do not do stupid and overtrade if you're trying to do things short term. Because this has been, I think this is the strongest rally since March of 22, consecutive back-to-back. And we could at least be in for a pause. Remember, a pause could be just a sideways correction. All right, you're rich. You're welcome, Charles. Well, I'm not trying to preach. I'm not preaching. I'm just teaching. Hope everyone, I'll wrap it up now. Have a wonderful, wonderful trading day, and I'll see everyone tomorrow for FOMC, not the meeting, just the last minutes from the last meeting and the kickoff to Jackson Hole. Talk to everyone later. Bye for now.